Come on in. I'm alive, Pablo. Let's do this. Hold on just a second. We'll make sure we're monetizing this to get that sweet, sweet money. Come on, man. Come on, man. All right. There we go. There we go. All right, all right. Turn on this one. What's up, Timothy? Hold on just a second. We'll get rolling. Where are you calling in from or coming in from, Timothy? I'm doing it, Kim, right on. Hey, Marie! All right, I'm doing it, Kim. Mucho gracias for a reminder. All right. We'll get Eastern Pasco, Washington. All right. Let's turn off this in case you guys are wondering what I'm listening to. It's a band that used to be around, which one of my favorite bands of all time called Caius. They're a, what do they say, like a desert, they say stoner rock. I hate the stoner thing. It makes it sound like a bunch of the guys just smoking dope. It might well be, I know. But desert metal from the deserts of California. And I saw those guys, Caius, in Manassas, Virginia in 1993. Oh, man, I'll never forget when I was managing or I was washing dishes in a bar in Arlington. And we had some guy, some skinny, long hair guy named Josh who had tattoos before his, basically I had a couple because I was in the Army and he had a bunch because he was and basically he was a stoner. And he was a cook, and I'll never forget. We're cleaning up at the end of the one of the night shift, and he says, "Dude, if you like metal, you're gonna love this band, Kai." Stoner hippie kid, man. He put on Caius, it blew me away, man. I was like, "Holy crap, holy!" I watched a few videos say of MMM. What's that, Kim? Mr. Money Mustache, that guy? Hey, Denny says he got a bunch of old Caius. Right on, man. That's fantastic. Denny, you are the man of the show. And remember Caius, the Josh, the guitarist, Hami, whatever his name is, he went to Queens of the Stone Age. Don't do anything for me, man. Queens of the Stone Age, bleh. Blues, oh, dude, that is probably one of the best albums of all time. Blues for the Red Sun. Not a bad track on that whole album, man. That is, oh, man. There's a couple good bands. I mean, I listened to it on, I got on the YouTube music app. So we'll read off. We got the Melvins. We got Clutch. Red Fang comes up. More Caius. Some band, 1,000 mods out of Greece. This is how I came up with 1,000 mods. I heard about them from the freaking YouTube music things. 1,000 mods out of Greece is fantastic. Then they got some stupid bands on here. I don't know why Neil Young's on here. Can't stand Neil Young. Ooh, John Lee Hooker and Canned Heat. All right. More Melvins. And Melvins never did much for me, but man. Ooh, Red Fang's got a song called Hank is Dead. All right, cool. I don't know why I keep throwing Melvins. They got CCR. I like CCR. I mean, not Melvins, Neil Young. I can't stand Neil Young. We got, all right. Some good stuff on here. Hold on a second. Just while I'm yapping here. Hold on just a second. The Utah County. Hold on just a second. Oh, yeah. This is the Utah County Swillers. That is, man, those Oh, those guys are so good. The Utah County Swillers. They're not metal. They're more very, not even rockabilly. I can't even describe them, but fantastic. Anyway, all right. All right, so I want to, all right, so what I got a couple things I want to talk about, then we'll go into some of your questions. I do want to kind of get into, actually, we'll wait for a couple more folks to jump on. So let's talk about, what do I think about Southern Company, Grand Marais, I don't know how to say that, Marais. I mean, they're an energy. I actually think commodities and utilities have some upside for sure. Yeah, I don't want to say upside. Yeah, let's take a gander at Southern Company. I got too many freaking things here. All right, hold on just a second. Oops, hold on just a second. All right, so let's bring up Southern Company, and then I'll answer your question, Kim, and then I want to go over a couple of things that's just nuts. I read this article I was out in the field. I was out planting all day. The better half and I, we went to the nursery, got some stuff. I got some 2x2s so I can stake in some vining tomatoes and vining squash and some vining cucumbers. Yeah, tomato, squash, and cucumbers. And maybe I'll even experiment with a watermelon. Anyway, so I got some 2x2s. We're going to stake them in. We're going to put this, not twine, but, metal, almost like a thick, Eddie 8 dynamite, good by Eddie. So low E string, if you know what I'm saying. It's like a low E guitar string, if that makes sense. And you nail it into a 2x2. You wrap around almost like you're wrapping around with an electric. You know what I'm saying? You plug it in. Anyway, so you're gonna wrap it around. You've tied up here. You tie it down below, and then what happens is you just make the vegetables you want to kind of grow vertically, if that makes sense. And I did that a little bit last year with just some poles, some stakes, some rebar. Actually, I cut up some rebar, and I made it a little bit too small, so it didn't grow enough. And then and that's where I said you got to make sure indeterminate versus determinate tomatoes. So indeterminate tomatoes grow indeterminately. There's like it just will grow until it stops, if that makes sense. And so indeterminate tomatoes, you can grow up like that. Determinate tomatoes are just a vine or just a bush, and they're determined how much they're going to grow. So you definitely don't want to prune determinate tomatoes. You don't want to take the suckers off or anything like that, because there's only so much fruit you're going to get from a determinate tomato. So I want indeterminate tomatoes so I can have them growing up as far, basically 7 feet is the idea. And so I got these two by 2x8 boards, but plant them in the ground. You take a sledgehammer, put them a foot in the ground, and then do these, low E guitar strings essentially for twine. And then they're going to grow those. Anyway, so then we went and got a whole freaking boatload of flowers for the better half that I was planting all day. Had to transport some bushes and some trees that weren't getting enough sun. Just freaking going crazy out there. Awesome. I love days like today. I just love getting the yard because everything you do today is permanent. I mean, for the most, obviously perennials, but just even for growing, everything you do today will have ramifications later in your future. And if you're putting in perennials, Charlotte does a lot of annuals for flowers, which is fine, but I like the perennial stuff. But anyway, that's what I was doing all day. I don't know why I went off that tangent. All right, so let's look at Southern Company. So we're gonna go over here. All right, so we're gonna go to Southern Company. All right, there we go. All right, so here's Southern Company. I haven't looked at it. I have no clue. I literally have no idea what's going on with Southern Company. It's a utility, obviously, so it's going to have some regulatory upside limits, if that makes sense. But let's take a gander. So I imagine the PE ratio will be low. The dividend yield will be high, I would imagine. But let's take a gander. So we're going to look. PE ratio is low. Historically, that's a little bit above average, but in this day and age, that's tiny. The forward, I don't like the forward dividend yield, but we'll go with it. The forward dividend yield assumes that what they're going to pay is going to be basically 4% dividend yield on today's price, if that makes sense. The price is what we say, $65 a share. So right now they're paying the dividend is what? I don't see a dividend date. 2.56. Divide that by $65 a share. 2.56 divided by 60 divided by 65, and there's that's 3.94. So yeah, 3.94. Okay, there you go. So that's their dividend yield. Is they're basically taking today's price and today's dividend. Yeah, I don't know why they're saying forward dividend. That doesn't make any sense. So anyway, so it's got a 4% yield. I like that a lot. All right, so qualified dividend income, which is good. Sniffy Joe isn't getting rid of QDI. That's good. All right, so far so good. I like what I'm seeing here for sure. I literally could care less what analyst says. Georgia Power is where I got Georgia Gas. Actually, I don't. Do I even have? Yeah, I'm not sure. I don't think I have Georgia Power. All right, Alabama Power is part of Southern Company. If I think so. Oh boy, restrictive voting laws undermine purpose of democracy, says people who don't like the Georgia's voting laws, I'm sure. All right. I don't care. So, all right. So I just, oh God, I hate politics involved in everything. It just drives me crazy. All right. So let's look at financials here. All right, so we're going to look at financials, and I just want to see how much. I imagine they're carrying a boatload of debt. Let's take a look. Basic earnings per share in 2019 and 2018 is $4.50. So they doubled their earnings per share from 2018 to 2019. That's crazy. I'm not sure what's going on with that, but we'll take it. Earnings before interest and taxes. Earnings before interest, taxes, amortization, and depreciation, $9 billion. All right, that's pretty good. All right, so we'll take that. That's pretty good there. As long as that, I don't know why I don't have it for these years. Anyway, okay, that's all good. This kind of bores me, but I want to see how much debt they're carrying because the debt's always a concern. All right, there we go. How much cash they have and how much debt. So the current assets are $8.6 billion. How much of that is cash? $1 billion and 3.3 of receivables. That's not a significant increase in receivables. Actually, all right. So they've been carrying for the last 4 years over $3 billion of receivables, and that's not extraordinarily high. It looks like so that's good, and it's been going down some. Inventory is about the same. Receivables going down. Cash is significantly lower than what it was in 2017, but they still have $1 billion in cash. That's good. 1.2 billion of other current assets. I don't know what those other current assets are. Hello, Finnegan. What's up, Big Bear? What's up? All right. And I don't know what these non-current assets are. Net PPE, protection, personal protection equipment. Investments and advances. What's that about? Long-term equity investments, 1.3 billion. Investments in subsidiaries, 1.3 billion. So that would, I don't know if I should be concerned about that or not. I just don't know. But what I really want to look at is how much is their debt. Whoa, $48 billion in debt. Wow. $48 billion in debt on top of which their total current assets are $8 billion. Ooh. $122 billion of assets, of which 114 is non-current assets. Net, I don't even know what PPE is. Net utility per plant, electric utility plant. I don't know how you value that. I don't know. But man, that's a lot of debt for an asset that may or may not be able to turn over to cash. So that's the question. Can you turn these non-current assets over to cash? I don't think so. So you got current assets, $8 billion. of which only $1 billion in cash, only $1 billion of long-term investments, and their freaking debt is through the roof. 51 billion total debt. What's their why don't they break it down, man? Maybe it's yeah. Why don't they break it down their debt? I thought they used to break down their debt. Let's see what they're. I've been paying off a lot of debt. That's good. I like to see that. Issuance of debt. And so look, they're issuing 8 billion, 8 billion, 6 billion, 5 billion. They're paying off debt. So they're basically just refinancing the loans, I'm sure. Yeah. Where is their? Okay, hold on just a sec. Let's go back. Another income. All right. So they got a bill. Oh, that's what I want to see. How much they're paying to the dividend. Hold on just a second. Net income. Diluted net income available to common stocks. Oh, is there right now? All right, how much they paying? Is that going to be on the cash flow? Okay, cash flow. How much they paying on the dividend? Do they have enough cash to pay their dividend? That's what I want to see. All right. Capital expenditure, repayment of debt, repurchase capital stock, and cash position, financing, operating cash flow. Operating good. Change in working capital, operating deferred tax and income from continuing expenses, change in working capital, investing cash flow from continuing investments, net investment changes. I don't know where's that. Right here, cash dividends pays. All right, so they paid 2.6, 2.6, 2.5, 2.4. They don't have enough cash to pay off their to pay their dividends, which yeah, that's always a concern of mine for sure. I mean, what are you gonna do? I don't know. I mean, I'm not gonna buy it because this is why I don't like to buy individual stocks, because what does that mean? I don't know. No one knows what it means. Let's go to profile analysis. Is it statistics? They usually give us a breakdown of. Yeah, I want to see current ratio. Trailing P, 4P, price to sales, price to book. Price to book is low. But I want to see current ratio. Fiscal profitability. All right. Return on assets, return on equity, income, revenue, 20 billion in revenue. If you see anything as this current ratios, a balance sheet, total cash, $1 billion, total debt, 51 billion right here. Yeah, I always like to see a current ratio of above 1. All right, so here's their book value per share, which I think is somewhat misleading. How do you judge a bank? How do you judge utility? I don't know. I mean, no one really knows. But I mean, the book value per share, 26.48. So basically, if they sold the whole company right now, you get $26 per share, but each share is trading at 65, which means the price to book ratio is probably, what's that, about 2.5? I bet it's about 2.5. Where's the price to book? I saw it up here someplace. Price to book rate, yeah, right here, about 2.5, right there, exactly, 2.46. That's pretty low. But how likely would you be able to convert that whole company into cash? To just, it's not reasonable. It's not realistic. But the current stuff is realistic, and the current right here, it means they don't have enough to pay off the current liabilities. They don't have enough cash to pay off the current liabilities. That's always a concern, without question. Total debt to equity, 156. So remember, the U.S. is going bankrupt. We got too much debt to equity. Well, I mean, could you say you probably look at GDP as kind of cash flow as opposed to equity? But either as you look at it, I mean, debt in of itself isn't the worst thing ever happened, but you can't go bankrupt if you don't have debt, if that makes sense. And if you're buying the common stock, you're worried about it going bankrupt. Leverage free cash flow. Well, okay, I thought you were my wife to bring me some tea, but it's just Finnegan. Okay. Anyway, so I hope that helps a little bit. I mean, would I buy it specifically? No. I don't like the idea of buying individual stocks. Do I have a couple individual stocks? Yes. I have Exxon. I got AKAM, Acme. I haven't looked at either for a while, so let's see what Exxon's doing. AKAM. Yeah, Acme is at 105. I don't remember what I bought it at. 99, I think. So I'm up there a little bit. Let's see what Exxon is doing. Exxon's at 56. All right, so it's off. It was at 62, and now it's down to 56. I bought it at 40, I think. So, all right. So there you go. All right. So Kim says, and then we're going to get in this thing I want to talk about because it's nuts, man. Can you talk about the Fed tax rate on 10, 12, 24? I remember you're missing one, Kim. You're missing 22% there. All right. So, hey, Harry. No, I didn't. No, I got on Exxon and I think I got a 40 pulverizer. Yeah, I own Exxon. Yeah, I like going live, Eric. It's fun, man. I enjoy going live a lot, actually. I don't make as much money as I do on some of the videos I do, individual videos I do, because some of those go, have, hell, tens of thousands of views. But I like going live. It's fun. All right. All right. So I wanted to go. Oh boy. Gary says visiting grandkids in Gig Harbor, Mass are alive and well. Lots of unmasked shame. I just smile. You, sir, are the man. Just smiles like, give me a hug. Give me a hug. All right. So Kim says, can you talk about the Fed tax rate on 10, 12, 12, 10, 12, 24? Remember, there's a 22% tax rate too. So 22 will be 25. 24 will be 28. Just keep that in the back of your mind. Example is if I make $76,000, is there a ladder tax rate? If I make $76,000 at 24%, I'm not following what you're saying there. If you make, I don't understand. If we take our trusty tax guide that I got from Wade Fow's Retirement Researcher website, Kim here is married. All right, so Kim is married. If she's married, filing jointly, 76,000. That's in the middle of the 12% tax bracket. So 76,000, you subtract, because Kim's married, about 25,000 for standard deduction. So she'd only be in a 12% tax bracket, but the first, basically 20,000 of that is taxed at 10%. And so basically she'd have 76, she'd have about 51,000 of taxable income. The first 20,000 is taxed at 10, and the next, whatever the rest of that is, 30,000 will be taxed at 12%. So it is a ladder tax rate. So anyway, I think a lot of people overlook how the taxes scenarios work, actually. All right, so let's go into this article I want to show you. So Kim, if you want to add to your question. All right, so this is freaking nuts. All right, we can find it right here. This is flipping nuts. Can you all see this? I hope. Yeah. All right, see, I can't make it bigger. All right. So John Malden from Malden Economics. All right, and I follow John every now and again. I like these economics and stuff. I enjoy it. It doesn't. I mean, I have them. Like Gary Schilling. Remember Gary Schilling from Forbes? I don't even know if he's still around. Hey, there she. Hey, come on, babe. So everyone wants to see it. They don't think I'm married. Come on, they don't think I'm married. Hey, there's my beautiful wife. Hey, can I kiss me on the cheek? Oh, boo. You saw her. You saw her, right? Thanks, babes. I gave her $10 to pretend to be my wife. Right. I love my wife. I feel bad for people who don't like being married. Chloe's at let me show you a picture of Coco. Hold on just a second. She's at look at that beautiful girl. Freaking Fauci can kiss my big fat behind, man. Telling these kids they can't go to proms and stuff. She's going to a prom. It's not even a prom. It's like just her friends are gathering together at a house to freaking. It's like a Fauci prom. I despise Fauci. Just FYI, if you love Fauci, you don't want to be on this channel because I can't stand that guy. The guy's a petty tyrant, like all the commissars are. Oh, man. Freaking scumbag. All right, anyway. All right, let's go. Let's go back to what we're saying. Chrome tab. All right. So, man, this is crazy. I can't. All right. So, anyway. Right now, the stock market is in the land where there should be C phase. What we don't know is when the wave is coming. Maybe there's a time to venture out and see what treasure was hidden beneath the waves, or maybe not. Prudence would suggest that we go searching for treasure on higher ground. Maybe. We'll get into that here in just a second. There's an age-old investor conundrum. How do you balance risk and reward? You have clues, but you can't be certain of what's coming or when it'll arrive or what it'll look like. You know you need positive returns, do you? But you also know you need to avoid major losses. All right. Let's see here. Hold on. By the way, can you talk about these people to come to this conference? All right. Now on today's topic. When every lot is odd, one side of the water may soon rush out of stocks is the amount of money rushing in. This is freaking insane. My friend Doug Cass recently shared this staggering chart. It shows the inflows of stocks, the inflows to stock funds since November exceeded the total inflows of the last 12 years. The inflows to stock funds since November exceeded the total inflows of the last 12 years. Doug helpfully pointed out the legendary Bob Farrell, and I think Bob Farrell is a big lib. I kind of remember him being kind of nasty, actually. If that's the same guy, there's a guy named Farrell in this business who was a big lib, a nasty guy, and I think it's him, actually. But if I'm mistaken, I apologize. But I remember when I was just cutting out, I was like, man, this guy's just nasty. I did not like him at all. I think it is this guy. But again, I might be mistaken. But individuals buy most of the top and buy the least at the bottom. See, I don't buy that to be true at all. But the past 5 months, $569 billion. The past 12 years, $452 billion. Inflows to stocks over the past 5 months exceeded those of the past 12 years. I cannot wrap my head around that. No, this is just stock funds. It doesn't even include individual trading accounts. The GameStop or GameStonk, what do they have to say? GameStonk? Where's the money coming from? The obvious answer is from the Fed. But Danielle DiMartino Booth gives us a visual chart to understand just how completely out of historical context the current levels are. Oops. Well, there you go. All right. First quarter 2020 cash flow bullish, tax day punted a month. I don't know what she's saying. Q1 individual tax returns plus stimulus checks. So, all right, here we go. Okay, good. I see. Here we go. So Q1 individual tax refunds plus stimulus checks right there. Okay. Look at that. So, I mean, look. So basically we have April individual tax deposits, not much of tax refunds, but, I'm not sure what that says. That's a April individual income tax deposits. Anyway, look at all the Q1 individual tax refunds plus stimulus checks right there. That's freaking nuts, man. Yes, some of this is showing up in retail sales, which were gonzo last week, but clearly some of it is showing up in stock purchases. See some reasons why below. We see well over 3 times a normal tax refund and stimulus number pushing $700 billion. I mean, look, it's normally about $200 billion. When you factor in tax refunds plus stimulus checks, it's right here. Then I assume this doesn't even include state unemployment and other indirect stimulus. Also notice a tiny blip in income tax deposits. That's what's weird. Look at that. Income tax deposits. When markets change, as they clearly have the last 2 years, you want to ask if something else has changed that might explain it. Federal Reserve activity and COVID stimulus payments are obvious factors, but I think something else is contributing. Way back in ancient times, which some of us can remember, stocks traded in the 100-share round lots. If the share price was 30, you had to pay 3,000 or 6,000 or some other multiple to get a round lot, 100 shares, exactly. You could trade in smaller increments, but brokers frowned on it, and some charge higher commissions. And odd lot orders often got executed at inferior prices. Yeah, I remember that. I have a friend who once ran serious money for a family office, and he focused on entirely buying bonds in odd lots. He didn't need to find odd lots. He could simply get 1% to 2% more yield for the little bit of extra work, which is one of the reasons I used to argue you should buy individual bonds as opposed to bond funds, if not you individually, but hire a manager who knows what he's doing. But that was when interest rates are much higher than they are today. You could going out in the market buying odd lots, buying premium bonds. There's not much competition in that field, so you buy odd lot, premium bonds, and stuff like that. If you know how to evaluate a bond, you could make bank. But for you as just a broker, a client of a broker, Ed Jones, it just doesn't make sense. Just buy the fund. All right. Over time, odd lot trading became a sign of amateur activity. Yep, I completely agree. More odd lot activity meant uninformed people entering the market and a top was approaching. By the 1990s, back office technology had made the whole round lot preference obsolete. Brokers stopped caring how many shares you traded. In fact, a round lot became one share. But now it's even less. Robinhood and many other trading platforms let users trade fractional shares. I believe this may be more consequential than is generally recognized. Look at the share price of some of today's top companies. Apple is around 130. In the old round lot world, you need 13,000 to trade it efficiently. Now you need less than a penny. This vastly expands the universe of people who can trade the shares. And Apple is low price compared to Amazon or Tesla. We have, without really noticing it, severed the connection between share price and liquidity. This matters in ways I think we may not fully understand. Combine it with game-like mobile apps that let people buy and sell individually tiny amounts that add up to big numbers, and without any kind of institutional decision-making process to constrain moves. Further, add trillions of government cash payments, often people with time on their hands because they're unemployed and they're told to stay inside. Of course, some turn to stock trading. It's an attractive side hustle. We have raised a generation playing adrenaline-based charged video games. For a relatively small stimulus check, they get to play in a game where Dave Portnoy assures them that stocks only go up and they can stick it to the man. What all this leaves is uncertain, but I suspect it won't be good. One of the first rules my mentors taught me is all it takes is a bull market is for buyers to show up. And all it takes to create a bear market is for the buyers to disappear. Just reading the zeitgeist, I don't think they're going to disappear for a while. I don't know. But let's see. Dave Rosenberg has followed these inflows and finds them problematic. He added another perspective in his last monthly chart book. The line in this chart shows the current equity exposure in the AAII, the American Association of Independent Investors. American Association of Independent Investors survey going back to 2002. And you can see right here, they're at basically an all-time high right now, right there, right there. I'd say it's definitely pretty bearish sign. Right here. Oh, I mean, 50. This is the time they should not have been in all. I wonder if they current equity exposure going back to 2002. But I don't know about that. Does that mean? I mean, because I had lower equity exposure. Well, I mean, I didn't have a bond exposure, but I had lower equity exposure in March of 2020 because the market took 40% of my portfolio. So if you had a 60-40 portfolio and the market took 40% of that 60%, inherently you have lower equity exposure. Yeah, I'm not so sure about that. That doesn't tell me. That doesn't say investors are having high equity exposure because they're rah. It just says the market has gone up. Yeah, I'm not so sure about that. I'm not sure AA survey captures individuals trading small amounts, but their inclusion. I'm not sure about that. All right. Dave has another chart showing the result. Compare the S&P 500 gains over the last 4 recessions. This one is stronger than the others were. So, yeah, right here is the 2020 recovery is much stronger than the 29 recovery, 22 recovery, 1990 recovery. The market recovery is actually tracked the 2009 one pretty closely, but remember in the previous chart, in 2009, investors had pulled out and then spent months furiously reinvesting. The current recovery happened with people close to fully invested. That means that is even stronger than the price action. All right, I don't know. All right, I got you. At some point, the government stimulus has to stop. Job openings are plentiful and the economy is opening up. Employers have to pay much higher wages to get someone to come to work. I completely agree with that. That is my concern about inflation right there. Some guy, he posted the other day on a YouTube channel I follow. He said that he was going to a restaurant and there's a sign that says, "Sorry for the delay. We're short-staffed. No one wants to work." Or he said, or something like that. The few people who show up to work are, I can't remember, but basically no one wants to work because they can make more money staying at home. That's 100% correct. And so I bet that's why there's always help wanted. No one wants to work, man. Well, can you blame them? They're not making enough money. It doesn't. Yes, I do blame them. I do. Absolutely. You should work. There's something called work. It makes you a good person to go and be labored. Not working, just sitting around, pick your nose and playing video games does not make you a good person. It doesn't. It makes you a slacker. And we got enough slackers in this country, which is why I thank the good Lord we're bringing on immigrants, because if we weren't, I mean, literally, I'm sorry. We can argue all day long about immigration, changing society and whatnot. If we don't have immigration, we're screwed. There's no other way around that. I've come to the conclusion that a good amount of Americans, not the vast majority or anything, there's still lots of good work, hardworking people. There's a significant number of Americans who don't want to do any work. They just don't. And as such, we have to have people come in here and do the work who are desperate to get here. We should make it legal, make sure they come in legally. Absolutely. But, I'm sorry, man. It's one of those things I've always kind of thought about, like, people don't want to do the labor. People don't want to do the labor. Well, 20 years of having this discussion, people are doing less labor than they were 20 years ago and getting more benefit for doing less labor. That's just a fact. So we can sit here, I'm 50. Some of y'all are older than me. A few of you are younger than me. And we can all sit there and say, when I was a kid, dude, I get it. When we were kids, we used to work. I get it 100%. Those days are gone for the most part. They just are. And as such, if they're gone, if they didn't work when they're 13, 14 years old, they're not going to just jump out the freaking job when they're 25, washing dishes. They're not going to do it. And nothing's going to change that. And so as such, I think there's a lot of people just going to have to write off and say, okay, they're just going to be wards of the state. And it sucks, but what are you going to do? But I tell you, like I did a video the other day, talk about the lady who drives 55 miles each way to bus tables on a Saturday night in some Mexican restaurant. And, in Owensboro, Kentucky, where, and I said, there's no, and, they got a kid who is, running the server. It was at my server. He's hustling like crazy. And I'm sitting there just stunned. The lady, the hostess who sat me down, it just wasn't a happy camper, man. And I'm just, I just think it's not good. All right. Anyway, so there you go. So that was nuts. I mean, I hope freaking more money went into stocks in the last 5 months, in the last 12 flipping years. It's crazy. Now, I will tell you, I always challenge the idea that it's a contrarian indicator that more people buy on the high end. Because I don't believe that, because I think the market is always going up, temporary lows, permanent highs. And so when it's always going up, you're always having more people buying at the high end, simply because more money goes in over time. And over time, the market goes up. So just basic numbers. It says, look, the market used to be 100. Now it's 105. Now it's 110. Now it went back to 103. Now it's back up to 113. So the market is always, the trajectory is like this. And as such, when you're throwing money in dollar cost averaging, which is what the vast majority of Americans are doing, inherently you're buying when it's higher and higher and higher, because you're not really catching a falling knife very often. It just doesn't happen. And so I don't like that. It's like, everyone's stupid. They're buying when the markets are high. That's a contrarian indicator. Yeah, I don't buy that, because what else are you supposed to buy? If you're just plugging money in. Now, what that chart I just shared with you showed was the insane amount of the stimulus. I'm just stunned by that. I'm stuck because I didn't get stimulus. You know what I'm saying? I made too much money, even though I got freaking 6 mouths to feed and 2 pups. I didn't get stimulus. And I mean, a lot of people did. And I guess a lot of people had extra money they could do with said stimulus, and which is to put in the markets, which boggles my mind, man. Boggles my mind. But anyways, that was pretty interesting. All right, let's a couple other things I want to talk about here. All right, well, I tell you, we'll just hold on just a second. All right, so we're going to look at rising rates, when to consider floating rate notes. I wouldn't buy them with a 10-foot pole. I got burned on floating rate notes in 2008, and I won't touch them again. Jeremy Grantham is a big fat clown. What they say? That guy, that comedian Rush Limbaugh is a big fat idiot. Jeremy Grantham is a big fat greenie. But he's a hypocrite, as all these big fat greenies are. I don't know if he's fat. I just say big fat because he's a hypocrite. He says, "Oh my God, we're all gonna die with climate change!" As he's flying around the world in his private jets. Screw you, Jerry Grantham. I don't know what a SPAC is. I know that's all the cast meow SPACs. I don't know what they are. But anytime I see a Jeremy Grantham, I chuckle because the guy's such a clown. Let's see. Annuities for retirement realities. Yeah, that's just from some company. All right. Don't care about a fireside chat. Seemed like, hold on. It seemed that there's something else I wanted to show you. Rebalancing free. Oh, right here. Okay, this is it. All right. So this is rebalancing frequency and safe withdrawal rates. Not a good picture with a guy with his sunglasses like that. I don't get that, man. All right, so this guy, rebalancing frequency and safe withdrawal rates. All right, safe withdrawal rate research has traditionally assumed annual portfolio. No, I don't mind I got my picture like that, but take the freaking sunglasses off. On top of that, you'll see why I find that to be this article to be a little bit odd. It's a sales pitch, essentially. All right, and the SWR safe withdrawal research has traditionally assumed annual portfolio rebalancing, and this frequency is suggested by many advisors, although some suggest quarterly, monthly, or even daily rebalancing. That's dumb. But is such frequent fiddling necessary? Rebalancing generates costs and fees and commissions, and depending on the type of account, would trigger taxable liabilities. I use a big picture client education software to examine the impact of rebalancing on historical safe withdrawal rates. So if we scroll down here, like, what's the big picture software, huh? And we shall see that this guy is a founder of the big picture software. I find it funny that he did the big picture software, but only at the bottom do we notice that. And I don't like that. I said, I use the big picture client education software. I wish he would have said it on the front end that he founded and he sells. And I did a test run of it. I'm not a big, I like it. I like the big picture software. I find it interesting. I'm telling you, man, it's not, all these rolling returns just don't mean anything. I'll share with you why here in just a second. The results argue against the notion to rebalance often. I agree with that. The big picture software allows advisors to build hypothetical portfolios using up to 11 major asset classes and backtest them over hundreds of rolling historical periods at 1, 3, 5 year rebalancing frequencies. It uses actual historical performance of indexes and inflation based on monthly frequency total returns. All right, so basically, he's using 60% large, 40% intermediate government bonds, and then he created 3 additional portfolios with other things, and he has rebalancing. I'm not going to get into it all that much, but I want to. So we're adding equity classes in different order will produce different results. Blah blah blah. Okay. He basically says rebalancing regularly at a less frequent rate diminishes. Rebalancing at a less frequent rate diminish a portfolio safe withdrawal rate? And the answer is basically no. All right. So I want to show you something here real quick. As with safe withdrawal rates, there's no decrease in longevity with less frequent rebalancing. Small differences of 1 year were occasionally seen as the rebalancing frequency varied, but generally portfolio longevity was unaffected. All right, so that makes sense. So basically, he's come up with hundreds of rolling year return patterns and said there's no evidence that rebalancing on any specific time, 3 months, 6 months, a year, made any difference. Or 3 years. I completely agree. All right, and then he says he has a bunch of different numbers. All right, so what I want to point out here, actually, hold on just a second, is I want to go. Equities have at times entered extended periods of lower volatility, even as their growth has outpaced bonds and other asset classes. In these cases, portfolio volatility has actually decreased as equity allocations have drifted upwards. So he offers a 30-day trial, which I use, and I enjoyed it, absolutely. But I want to show you guys something. So we're going to, historical data ranges from January 1st, 1926 to December 30th, 2020. And I'm not here to bash this guy. I like the software. But I thought this was pretty interesting right here. How did you derive monthly return data for asset classes, including gold, international small cap stocks going back to 1926? My understanding is that standardized monthly return data for the the IFA and Russell 2000 did not exist until the 1970s, and the U.S. was on the gold standard until 1973. It was illegal to trade gold. All right, and so he says, the data exists. They are provided by third-party vendors. Spending is monthly. All right. So the data exists, but provided by third-party vendors. And JR, who I like, I don't mean to press on, but would you please disclose the names of the indices you are using as benchmarks? And we don't have any things. And I said, I'd be very interested to see how gold prices were examined previous to the 70s. After all, wasn't it literally illegal to own gold after FDR? So I thought that's pretty interesting. Now, another reason I'm not a big fan of these rolling return type of things is simple, is that it's not statistically relevant. It's just not. I say this till I'm blue in the face, but let's just take our trusty board here, and we're going to go 1926 to 1950, no, 40, 26, 36, 36, 46, yeah, 55. All right, so 1926 and 1955, that's 30 years, all right? 30 years. Then we're going to go 1927 to 1956. That's another 30 years. And what's the difference between these two things? What's the difference? Basically only 1 year. That's it. Everything else is the same. Everything else. So basically of 30 years, 29 are, there are 29 same years in this scenario, 29. So if we have a, what's the beta, or is it R squared? I can't remember what the number is, but basically we take 29 divided by 30, 96.6% similarity between these two data sets. That's not that's not statistically relevant. It's just not. And this is what frustrates me, I think, with these rolling returns. We go to 1928 to 1957. So 1928 to 1957 still has 28 similar returns as 1926 and 1955. That's not independent. That's completely dependent on each other. So the numbers you get from 1928 are completely dependent on the numbers you get from 1926, other than 8% of the time. It's not statistically relevant. It's not. Now, is it interesting? Yes. Do I use that in my own book on Wellington? Yes, absolutely. But I don't like this idea that says, oh my goodness, it's statistically relevant. It's just not. It just says this is what happened in the past. And when I did my own book on Wellington, where did I put that freaking thing? What I did in my own book on the Wellington is I really was not shooting for the consistency. I was more shooting for, we had low inflation or deflation in the Great Depression. So we had deflation. Let me write this down. So we had deflation, negative stocks. All right, deflation. We had deflation, negative stocks. That's 1930s. All right, so then we go to, that's 1930s. Then we go to 1966 to 1982. We had inflation, right, with flat stocks. Inflation with flat stocks. And then we go to 2000 to 2010. We had low inflation with negative stocks. Low inflation with negative stocks, if that makes sense. So we have three very unique periods. Notice the one thing we haven't had high inflation and negative stocks. None. But from 1966 and 1982, you didn't make any money. Well, you didn't get smoked. 73, 74 are bad, but you didn't get smoked. You did not like in 2000 to 2009, and not like in 1929 to 1937. It wasn't like that at all. So from 1966 to 1982, as long as you stayed in the market, you made with net of inflation, you basically zeroed out. You didn't make any money. You might have lost a little bit net of inflation, but wasn't much. So we haven't had a high inflation, low return environment yet. That's the, or when I say low return, negative return environment. That was the one area I'm concerned with, to be honest with you. And then we look at Japan as our kind of benchmark for low inflation, low returns, horrible returns, but low inflation from 1990 basically to now. We haven't had that either. Well, I guess we kind of did. In 1930s, negative returns and deflation. Japan has kind of had the same thing, but Japan was even longer than that. So anyway, the point being is we don't know what's going to be like to have high inflation, low returns. And that's so where I was going with my Wellington book. I wasn't necessarily looking at the rolling returns like a lot of people do to give you a safe withdrawal rate because it's just not statistically relevant. I was more looking at it from a perspective of three unique scenarios. How did Wellington react in those three unique scenarios? And other than the Great Depression, other than the 1966 and 1982, it did fine. Yes, because it did. Other than 1966 and 1982, it did fine. Initially, my concern was that the bonds got smoked during the high inflation times. It wasn't. It was the volatility of the stocks. I'm still amazed by that, actually. It's weird. I never would have thunk that. Anyway, so that was my concern here. But remember, you can't you can back test all day long. It's completely irrelevant. I'm not even going to bring it up, but as I always bring it up, back tested in Japan in 1989. You're like, yeah, look, this worked. Then kaboom, you got smoked. Long-term capital management. They had the Nobel Prize, freaking physicists, economists, everything. I mean, talk about evidence-based investing. All the evidence said this, that, and this, the other. It works until it didn't, and they almost took down the whole Wall Street. Anyway, so just be careful of that. All right, I got a couple of things I want to talk about. So we talked about that. Right. And I'm a big fan of advisor perspectives, by the way. My man, Bob Hirschbacher, I can't remember. Also, I did want to wait. I was going to bring this up too. So we didn't talk about, I didn't do videos on the last two things on bonds that my man Alan Roth had talked about. So this is right here, the 8 great misconceptions. If you see my fingers are all dirt, well, I guess not that dirty. I did take a shower, but they're cut up something wicked. I can't do much. I can dig a hole. I'm very good at digging holes. So I can't do much but dig a hole. So the old ball and chain, she doesn't get much out of me except for digging a hole. In fact, she even grilled the hamburgers thanks to digging all these holes for her. No, put it over there. No, I think it went over there. Can you move that one over here? How about that tree? Why don't we move that over here? I say, thank goodness you're so pretty, gorgeous. Ooh. All right, so the 8 great misconceptions about bonds. So we talked about most of these before, and look, I'm a big fan of Alan Roth. Actually, I think I commented on this. Yes, I did. This is actually, he's pretty funny. Hold on just a second. I see you're still all right here. So here's this guy, Ray Bent. I don't know who this guy is, but I see, Alan, you're still locked in the same logical fallacy. The mean versus the aggregate tells you nothing about the distribution of the successful for those versus those who are less so in terms of investment, people who can invest money, manage money, nor the degree of success or failure. Indeed, cost is a hurdle, but not necessarily insurmountable. As Warren and Charlie say, because we're on a first name basis. You just need an area in which there's little competition. So basically what Ray is, I guess Michelle is arguing that she has been able to get better than market returns because she is a better investment manager. Okay. So Ray says, well, I will just keep reading. This argument is so boring. I get embarrassed for people who say this. So Barry says, every time you make this point that while the average active manager does not outperform, there are some competent individual active managers who can and do outperform. I have the same thought. My thought is that while you say that is probably true, how the hell is a client supposed to find his way to the minority of truly superior active managers? Based on the law of averages, most will not. Exactly. The webpage and pitch coming from less competent average active manager most often looks and sounds just as persuasive as that is most competent. And then there's the output criminal conmen, the outright criminal conmen who tend to have exceptionally good pitches. My advice to investors is not to bother trying to find the superior needle in the average haystack. I tell them that even if they luck into that rare superior active manager, am I showing you guys this? Oh, I'm not sure. Oh, I didn't put the right thing on. Hold on just a second. I got to put the right one on. Oh, Sorry about that. Right here. Yeah, sweet. So, story I talk about Ray saying Alan's still crazy after all these years because Charlie and Warren say you just need an area to outperform in which there is little competition. All right. So this guy says, my advice to investors is not to bother trying to find that superior needle in the average haystack. I tell them, even if they luck into that rare superior active manager, there won't be any objective way to know they have done so. The superior manager may just about have to have a few years of tracking error where his or her truly superior strategy underperforms the past benchmark. All right. So right here, then we're going to go down to let's see. All right. So here's Alan. Hope you are well. Yes, I still believe in arithmetic. How is life in Lake Wobegon, where you are one of the 90% of residents who are above average? But I agree with you on the primary market as opposed to secondary. Are you earning 1% on your cash backed by the U.S. government? In all seriousness, I never want to convince you that to index as investors and advisors who pick parts of the market keep markets efficient. All right. And then Alan says to Barry, I agree that if I knew who right here. Yep. I agree that if I knew who the three best portfolio managers of the future would be, I'd abandon active. Bill Miller had a great track record until he lost more monies for investors than he ever made. Even Warren Buffett has lagged the market significantly over the past 10 years. And smart beta has been pretty dumb. Oh, I love that. So then I think I actually commented right here. Could not agree more with you, Barry. Did anyone know who Peter Lynch was in 1978? Of course not. 10 years later, everybody knew him. Was he good, lucky, or both? We don't know. All we know is that no one would have identified him before his amazing run of 10 to 15 years. For the first time in about 10 years, I looked up the Davis New York Venture Fund because I've always been a fan of Chris Davis. His numbers are middling too. Ken Hebner, Bill Miller, maybe Kathy Woods. How dare I? No one can tell us who that person will be that will smoke the market in advance, but they always point backwards and say, see, it can be done. Look at Kathy Woods. Then a few years later, they'll say, Kathy who? It's such a dull argument, it puts me to sleep. And then Alan says, Josh, I don't mean to brag, but I'm really good at predicting the best managers of the past. In fact, I have a 100% accurate track record. Now, if I only get my time machine to work, is really true when you read past performance is not indicative of future returns. All right, so that's all good stuff. Big fan, long time, first time. So let's go back here. Have I lost anybody? I'm still tracking. All right, so I want to go back to sharing what Alan has said. Anyway, so I like the fact that Alan's also got a keen sense of humor, and he agrees with me. All right, because you can't. I'm sorry, you're not gonna beat you're not gonna beat the market. You just won't on a regular basis. All right, so let's go down right here. I want to show you this. Oops, I've said this 1,000 times a Sunday. Separately managed muni bond portfolios provide high income, and I look at this like high dividend stocks. I look at there's another one, dividend. Oh, there's another one out there too. I hear all the time. What do you think about this? It's not what we talked about yesterday. A covered call one. I forgot what it was, but I get this all the time. It pays a significantly higher yield. I forgot, but anyway, I regularly look at portfolio statements showing tax-free income between 3 and 5%. This is a fallacy that the regulator, the MSRB, the Municipal Securities Regulation Board, MSRB, should deem illegal. The illusion works like this. Now, I want to get out my graph here because this is so freaking important. You buy a bond with a coupon for $5. All right. You pay $112 for the bond. All right. So you're getting $5 for every 112, which is a yield of 4.46. It makes sense so far. All right. But the bond will mature or be called in 3 years at 110. All right. So I want to roughly $4 of that $5 yield is return of principal. I'm going to make this simple because, all right. So we buy a bond that pays a $5 coupon, all right, for 112. Remember, bonds, their par value is 100, whatever. We're just using 100 for this. That's usually what it is. So basically, I have a par value at 100. It matures at 100. All right, so always remember this. The bond is issued at 100. That's par. It matures at 100. You're getting 5%, so it's $5, if that makes sense. But we know that you paid 112 for the bond. So what does that mean for other bonds that are out there right now? So this is a question for you. I want you guys to answer this. All right. Let's see if we got people. All right. All right. So again, the bond was issued at 100. It's going to mature in 3 years at 100. We have a 5% coupon. So what does that mean to interest rates if we paid 112 for the bond? Who wants to take a guess? We paid 112 for it. So I'm going to put 112 is what we bought it for. All right, so we bought that bond for 112. Why would we have bought that bond for 100? Let me write that better. Why would we buy that bond for 112 when it's going to mature at 100 in 3 years? Why would we do that? Right, so let's see what you guys got. Look, I got to write that back. So who's got this? Who's got this? Anybody? Anybody? All right. So remember, Damien. All right. Good job, Damien. That's all right. So bond was issued at 100, matures at 100. We got 3 years left. We got a 5% coupon, but we paid 112 for it. Think this through. Non-negative yield. Good observation. All right, good. DB Douglas says, what's the question? Why would we pay 112? Yeah, right on, Harry. Freaking Harry, man. For a bond that's going to mature in 3 years at 100, why would we pay that? What happened? Interest rates went down, Slim Dog. Yes, indeed. Interest rates went down. Interest rates go down. Price of, gotta do this backward. Bonds go up. Interest rates go down. Price of bonds go up. And so this is so critical. So what's happening Rebecca, is in this case, we're saying, okay, we're going to pay 112. This is what we're going to pay. 112 for a bond that's going to mature at 100 in 3 years. In the interim, we're going to get $5 a year, 1, 2, 3 times. We're going to get $15. All right, so we're paying 112 for a bond that's going to mature at 100. We will get $15 of interest. What's our total gain? What's our total gain? I'm telling you, once you grasp this, so you're like, oh, that's easy. I get how bonds work. I'm telling you, it's going to be the easiest thing you ever heard. We paid 112. 3 years from now, the bond's going to mature at 100. In the interim, we're going to get $15 of income. What's our total gain when all said and done? Not the percentage. Just give me the dollar amount. How much did we make on this bond? We're going to assume it matured. All right, just for simplicity. How much? $3. Right on, Rebecca. We made $3. We made $3. And yet they're saying, going back to Alan Roth, what are they saying? They are saying, share a screen. They're saying you're getting a 4.4% yield because you're getting $5 on $112 that you pay for the bond. But you're only getting $100 back on the bond. You're actually giving $12 back because the bond matures at 100. Because the interest rates at the time you bought that bond went down. The $5 coupon bond costs more. And as such, you're going to pay 12% more than what a prevailing bond would go for because interest rates went down. But you're going to turn around and give that 12% up when the bond matures because the bond matures at $100. And yet they're going to say, you're going to 4.4% yield. But you're not going to 4.4% yield. You're literally getting, you're making $3 on a $112 investment over the course of 3 years. And his actual yield right here is 0.89%. And then you factor in the bond manager is charging 1.5% in fees. The actual return is going to be about half that. And by comparison, a bond fund is not allowed to report return to principal. Now, I don't know how. So as of April 1st, the Vanguard Intermediate Term Tax Exempt Bond Fund yielded 0.93. I do not know how closed-end funds, Nuveen. I get a lot of people say, "What do you think about these CEFs, closed-end funds?" I don't know how they. Actually, let's just look at one. Man, I tell you, if anything on my YouTube channel, if you all could get a gauge of bonds, it's such a. I'm not going to say it's corrupt. It's not corrupt. Let's go to Nuveen, Virginia. Uni. All right, let's look at. All right, let's go here. We're gonna look at Nuveen. Right on, Rebecca. All right, so you all got that's fantastic. All right, so let's go to Nuveen. I don't know how Nuveen is just a closed-end fund company, and I've always been NPV. There you go. Let's look at NPV. So we're gonna go to Market Watch. NPV is a Virginia Quality Municipal Bond Fund. I used to have this in my portfolio when I was a broker at Legg Mason. NPV. All right. All right. So this is a municipal. Did I go to Market? What did I do? I probably should go. Yeah. All right. Whoa. Net expense ratio of 2.2. Jeez Louise, man. On a bond fund? Oy. Yeah, I don't think I'm digging this. That's nuts. Yeah, forget that. I'll tell you that right now. Let's see. We got nothing here. What's going on? All right, so let's go to NPV. All right, so this is paying 58 cents a share. I want to make sure it's the right. Yeah, paying 58. Remember, it trades on New York Stock Exchange right there. Remember, we talked about this last night. It's 3 tickers, 3 letters in its ticker. Thus, it trades on New York Stock Exchange, right? It's not an open-end fund. An open-ended fund, like a Vanguard fund, will have 5 tickers, VFIIX, which means it doesn't trade on an exchange. You just buy it directly from Vanguard. So because it's a 3 letters in its ticker, it trades on New York Stock Exchange. It trades like an ETF. It's called a closed-end fund. So there are closed-end funds before they're ETFs, so that makes sense. And I've always been a fan of Nuveen, but 2.2% is expense ratio. That's freaking nuts. On top of that, it's going to pay 58 cents a share, all right, as a dividend. So we take 0.58, we divide by the price per share at 16.45. I can't do this in my head, so I take my trusty calculator. We do 0.58 divided by 16.45. Yes, 3.5%. Now, the problem here is we don't know what's in here. I don't know what the bonds are doing. I don't know when they're going to mature. But if you think you're getting 3.54% tax-free with a fund that's paying 2.2%, I'm not going to take much time to investigate this. I highly suspect this is just like Alan was talking about, where he says the bonds just give you your current yield based on the current price as opposed to an open-end mutual fund like a Vanguard fund. I can almost assure you that. But I don't know. I don't know how you would get 3.54% tax-free when it's got 2.2% expense ratio on a municipal bond. That's nuts. So I think where I'm going with this is be very, very careful on these closed-end funds not to get suckered. Look, I'm getting 3.54% tax-free. Oh my goodness. I don't know what kind of buying junk. Let's take a look. I don't know what they're buying. And I'm not here to disparage these guys. I just don't know. But given what I know, what Alan had just written, and given what I know what the market is doing in municipal bonds, that's extraordinarily high on top of a 2.2% expense ratio. There's no way. I shouldn't say. I highly suspect you're not going to net 3.54% tax-free. Anyway, let's see what kind of holdings they got in here. And why don't they have a P? This doesn't make any sense. I'm looking at the municipal income fund. Why would it have a PE ratio? Yeah, I don't get what's going on here, man. This doesn't. Municipal income fund. All right, so I don't know what's going on, and I'm not going to dive too deep in that. But I don't get holdings. Holders, sustainability. The freaking holdings, man. Statistics, historical data, profiles, just. Closed-end fund, fixed income, mutual fund, okay, invest in the fixed income bond markets of Virginia. So why would I have a PE ratio? The fund invests primarily in municipal securities rated BAA or triple B or better, which I think is above junk. Income exempt from federal and Virginia income tax. All right. I don't dig that at all. All right. So I guess they're saying from their cash. I don't like that. So let's hold on a second. What is does Vanguard got a? Let's go to DuckDuckGo. Does Vanguard got a Virginia municipal bond fund? Vanguard, Virginia. Oh, it does. Does Vanguard got one? I'll be stunned if this is paying over 3%. Let's just put it that way. Yeah. Can't make friends with salad. You can't make friends with salad. You can't make friends with salad. Now, let's see here. Here's a mutual fund. Hold on, Jess. This will make sense when I get my head wrapped around this. I'm just all right, so here's a mutual fund. Now look, if this is the mutual fund, that's Nuveen's owned by TIA. Hell's bells, I didn't know that. Nuveen is owned by TIA. When did TIA buy friggin' Nuveen? All right, so here we got FVATX, which means it's an open-ended fund. I'm going on a limb here, my friends. I'm going to say the yield on this should be significantly lower than that on the closed-end fund. Oh, look at, there we go. 1.11 is a 30-day yield. Yield at NAV. But this is what we want. That's the distribution yield at NAV is net asset value. But this right here is what matters, a 30-day SEC yield. I hope that makes sense. You see what's going on here is that the Nuveen closed-end fund had a 3.45% yield, which meant basically net, if you took away the freaking 2.2% expense ratio, the gross yield was over 5.75%, was 5.75% basically. which is just pure insane, unless they're going way deep into junk bond status, and they're not. And that was the completely fake news. The CNN, that's like CNN. But if you look at the mutual fund, the exact same thing. It's got a 30-day SEC yield of 1.11. Just because what we said with Alan Roth. That's, I tell you, man, how many people get suckered into these closed-end funds, these huge yields? Yeah, that ain't good. I'm not a big fan of first time, long time. I'm not a big fan of that. That's and here the expense ratio is 0.58. So the expense ratio is a quarter of that of the closed-end fund, and yet it has a yield a third of that of the closed-end. The whole thing's nuts. The investment industry, man. That's just great bad. All right. So I got more stuff, but I guess I'll stop there. I'll do another video on that tomorrow. Let's see what else I just got. My reading board here. I'll just share with you what I'm reading. And right here is a big one now. Nassim Nicholas Taleb has gone nuts on the COVID stuff. I don't know what happened to him. I literally don't understand. The minority rule. All right. So Nassim Nicholas Taleb had written his book on Skin in the Game about how a small minority will capture the leadership of basically an organization or country, which is why I know you're sitting there thinking, how are these SJWs ruling the world? It doesn't make sense. And he explains it well. So it's the most intolerant wins, the dictatorship of the small minority. Not going to read that here, but Nassim explains how once an intransigent minority reaches a tiny percentage of the total population, the majority of the population will naturally succumb to their preference. The best example I know that gives insights to the functioning of a complex system is with the following situation. It suffices for an intransigent minority, a certain type of intransigent minorities, to reach a minutely small level, say 3 to 4% of the total population, for the total population to submit to their preferences. Reminds me of a certain group of people right now who are health people of Pennsylvania who kill people but now are been promoted. An optical illusion comes with the dominance of the minority. A naive observer would be under the impression that the choices and preferences are those of the majority. If that seems absurd, it is because our scientific intuitions aren't calibrated for that. The main idea behind complex systems is that the ensemble behaves in ways not predicted by the components. The interactions matter more than the nature of the units. Studying individual ants will never give us an idea of how the ant colony operates. For that, one needs to understand an ant colony as an ant colony, no less, no more, not a collection of ants. This is called an emergent property of the whole, by which parts and the whole differ because what matters is the interaction of such parts. And interactions can obey very simple rules. The rule we discuss in this chapter is the minority rule. The minority rule will show us how all it takes is a small number of intolerant, virtuous people with skin in the game to form the courage for society to function properly. The example of complexity hit me, ironically, as attending the New England Complex Systems Institute summer barbecue. As our hosts were setting up the table and unpacking the drinks, a friend who was observant and only ate kosher dropped by to say hello. I offered him a glass of that type of yellow sugared water with citric acid people sometimes call lemonade, almost certain he would reject it owing to his dietary laws. He didn't. He drank the liquid called lemonade. And another kosher person commented, "Liquids around here are kosher." We look at the carton container. There was fine print, a tiny symbol, a U inside a circle indicating it was kosher. The symbol would be detected by those that need to know it and look for the minuscule print. As to others, I had been speaking prose all these years without knowing, drinking kosher liquids without knowing they were kosher. And there's the U for being kosher right there. Criminals with peanut allergies. A strange idea hit me. The kosher population represents 0.3% of the residents of the United States. Yet it appears that almost all drinks are kosher. Why? Simply because going full kosher allows a producer to not have to distinguish between kosher and non-kosher for liquids with special markers, separate aisles, separate inventories, different stocking sub-facilities, and the simple rule that changes the total as it falls. A kosher eater will never eat non-kosher, but a non-kosher eater isn't banned from eating kosher. Or rephrased, a disabled person will not use the regular bathroom, but a non-disabled person will use the bathroom for disabled persons. Granted, sometimes in practice, we hesitate to use the bathroom with a disabled sign on it owing to some confusion, mistaking the rule for the one for parking cars under the belief that the bathroom is observed for the exclusive use of the handicapped. Someone with a peanut allergy would not eat products that touch peanuts, but a person without such an allergy can eat items without peanuts in them, which explains why it's so hard to find peanuts on airplanes, why schools are peanut-free, which, by the way, increases the number of persons with peanut allergies as reduced exposure is one of the causes behind such allergies. Yes, but having kids with peanut allergies, we want the exposure in a contained environment there, Nassim, because if you get exposed on the lunch floor and your EpiPen isn't there or someone doesn't know how to administer it, death is going to happen on the dance floor. Let me just tell you there, man. That's just a fact. So let's not be kosher, or what's the word I'm looking for, cavalier in saying peanut allergies. Oh, man, you should be exposed. Yeah, in a contained environment where we can make sure that my child isn't being exposed to your stupidity. An honest person will never commit criminal acts, but a criminal will readily engage in legal acts. Let's call such a minority an intransigent group and the majority a flexible one. And the rule is a cemetery in choices. I once pulled a prank on a friend. Years ago, when big tobacco were hiding and repressing the evidence of harm from smoking, New York had smoking and non-smoking sections in restaurants. I once went to a lunch with a friend visiting from Europe. The restaurant only had the availability in the smoking sections. I convinced a friend that we needed to buy cigarettes as we had to smoke in the smoking section, and he complied. Anyway, the point being in that regard, which I think is incredibly interesting, is that we're like, look, man, I don't care if you're whatever your sexual preference is, whatever your gender identity is, all that, it doesn't bother me. It clearly bothers you to need to be that way. As such, you do what you got to do. I still do what I do. It doesn't bother me. It does bother you. So you have more skin in the game to ensure that I follow your dictates. It's just that simple. It's that simple, man. I don't want to argue with people and this is where I go on the line about the teachers unions. Anytime there's a vote, the teachers unions goes full throttle. 90% of the teachers in the union will vote because they get a huge benefit. Let's say $10,000 on a pay raise. I'm just using that for an example. But it only hurts you 50 cents every paycheck for a sales tax increase. That's it. So you're like, yeah, for them it's huge because there's such a small minority who benefits ginormously. But for you, it's such a large majority who doesn't get hurt that much. It's just not that big of a deal. We don't have skin in the game where they do, big time. And that's just somewhere why Wayne LaPierre and the NRA saved the gun rights. I'm just telling you right now, they did. Because the skin in the game for the NRA and the gun owner says, this is a line we're not going to cross. We will die on this hill. My cold dead hands, as Charlton Heston said. Remember that? My cold dead hands. And if was it Moses? If Moses is saying that, righteousness is on our side. Anyway, what happened was most people don't like guns. It's just not that big of a deal. But the people who do like guns, like this guy, 556, says this is a battle we will engage on for sure. And most people say, whatever. And they say, but the guy just banned Jonathan Blackman said, the majority of people want gun control. I say, yeah, but the majority of people don't want it more than we don't want it. And even if we're a minority, we are so forcefully against it that we overcome the majority who's somewhat for it, but they just don't care all that much. And that's how it comes. All right, so let's keep going here real quick. Then I'll answer some questions, and then we'll say good night. Good night. It's time to say good night. All right, we've got something here from the Squared Away blog. What the research can tell us about retiring. There's something on here I wanted to. Retirement ages geared to life expectancy. Sense of whether one might live a long time because of good health or simply seeing that parents or neighbors are living unusually long is a compelling reason to postpone retirement, either to remain active or to build up one's finances to fund a longer retirement. A recent study found that as men's lifespans have increased, they've responded by remaining in the labor force, especially in the areas of the country with strong job markets and more opportunity. Yeah, well, or because they've been scared crapless. It's common for a worker's income to drop after retiring, so the good news shouldn't be surprising. A study highlighted in a recent blog. How much will your retirement taxes be? 4 out of 5 retired households pay little or no federal or state income taxes. Who should we pat in the back? Yeah, this guy. The average retired household with income in the top 20% can expect to pay 11% of their income in state and local taxes, in large part because they are taxed on the money they withdraw from 401k, IRAs, and other assets. The average balance in this group's accounts is nearly $770,000. Who's saying this? Oh yeah, this guy. 11% of their income is state and federal taxes. Top 20% on $770,000. Not a big deal. But taxes are going to kill me. I got to get out of Maryland. You got to get out of Maryland for other things, but not taxes. So stop. Taxes are not the enemy. Now, property taxes are bad. I'm telling you right now. That's the concern for sure. All right, we got that. We got what's this one right here? Ooh. This is one I've been meaning to do for a while. Oh, man, this is going to be fun. I'll do this one tomorrow. Right here, amigos. From the Fed, the St. Louis Federal Reserve Board. Nikkei stock average. I'm telling you, right there. 1989, 34,000. Right here, 22,000. You think that's bad? Check this out. Anyone still here? All right, cool. Still got people down here. All right. I appreciate y'all being here while I just ramble and I sing my songs. All right, here comes the Fred. Average central government debt, percent of GDP for Japan. All right, so debt to GDP. Here's Japan in the blue, 196%. And as of July 2020, here's the good old US of A. In your face, Canada. As of central government debt, as of 2021, April 7, 2021, good old US of A is 98% central government debt compared to GDP. You can grow your way out of debt. It is true. You can grow your way out of debt. It's kind of like you can grow your way out of debt with higher income. That is literally the more income you make, as long as you're not piling it on, you can grow your way out of debt. But there you go, man. Interesting. So all these people say, we're going to go bankrupt. We're going to have inflation, hyperinflation. Oh, my goodness. Maybe not. How do you explain Japan? I've always asked, how do you explain Japan? All right. That's not it, though. Hold on just a second. Let's take a look at this. Residential property prices for Japan and the United States. Whoa! So here's Japan, 1990. All right. Kaboom, kaboom, kaboom. Look at that. Here's 2009 or 2007 for the good old US of A right here. Or Q 2006. Look at that. Q2 2006. Oh, I remember that. It fell to here. And here we are back here. This is as of Q3, is that what it says? Q3 2020. 136. And here we were right there, 151. So we're high, but we're still below where we were, right? Now we're still, my goodness, no way anyone can say we're freaking, not way high, but we're still below where we were. But look at what Japan did. Look at that. That's nuts, man. And then if we look at inflation rates in Japan, zoops. Nikkei, zoops. Inflation, zoops. Stock market, zoops. Unemployment, zoops. None of that's supposed to happen in economics. None of that's supposed to happen, but it did. It's still there. Look, it's Japan from 2009, I guess that is. 2011 till today, it's up a little bit, not much, man. It's like at 100 in 2011, so it's up 13, right there, 13% from 2011. Wow. The US of A was at, where are we at? 93 in 2011. Now we're at 136. That's that's just not hyperinflation. Now it might be, but I mean, can we stop with this? Like it has to be. You can grow your way out of debt. But you have to. But here's the problem with Sniffy Joe. These short-term stimuluses, and Trump too, by the way. These short-term stimuluses do give you a boost of economic activity. There's no getting around that. Every economist knows this. That you can stimulate on a short term, but it hurts the long term with inflation. So the question is, are we coming out of a hibernation that was forced on us by Fauci, or are we and we're going back to where we were before COVID, when the Trumpster had the economy firing away on all cylinders, or is this just a sugar high? I don't know. You don't know. I don't know. We just don't. And so that's the question. What do we do? I don't. Well, I'll share with you here in just a second my thoughts on that. All right. So the last thing I'm reading here, and all these things I plan on doing videos on, was right here. I got more. Well, here I will just share with this. My man, a couple of y'all sent me this. IRS surprises with apparent explanation of the Secure Act 10-year rule. There are RMDs for inherited IRAs, according to Ed Slide. Yeah. Crazy. And then I do want to share you this. For you climate people, oh my goodness, we're all going to die from emissions, from CO2. All right. EIA. U.S. CO2 emissions declined 11% in 2020, but yet no change in atmospheric carbon dioxide. Still at probably 400 parts per million, I imagine. Let's see here. Let's see if we can campaign find ppm. Yep. That's just a comment. Yeah, all right. I don't know what they said on parts per million on here, but there you go. No change in rising atmospheric CO2. So residential, commercial, industrial, transportation. The big one right here is transportation is down 15% for carbon dioxide emissions. So put down your pipe and smoke it, you freaking green Nazis. Oh, how I despise you guys. Emissions decreased by 11% in the U.S. in 2020, primarily because of the effects of the pandemic restrictions. Furthermore, U.S. energy-related CO2 emissions fell in every end-use consumer sector for the first time since 2012. CO2 emissions associated with energy use fell by 12%, blah, blah, blah. Within the U.S. power sector, emissions from coal declined the most by almost a fifth at 19%. Natural gas-related emissions rose by 3%. Fossil fuel generation declined, while power generation from wind and solar continued to grow. Okay, because we're growing off of nothing. But anyway, U.S. energy-related carbon dioxide emissions by end-use sector. Petroleum right here is going down by 6% in 2020. Commercial natural gas is in the yellow, petroleum is in the red, and here would be what's that? Is that coal? Or is that? Yeah, I guess that's not coal, man. It seems so. Anyway, solar electricity net generation. Let's see here. Photovoltaic generation right here. I have to look at the electricity generation from solar energy and a minor extent wind increased by 17% in 2020. People say, see, solar increased by 7%, 17%, and everything else fell. Yeah, because everything else is huge and solar is just a tiny little pittance. Stupid. The big CO2 emission reduction experiment from traditional fossil fuel energy sources so often demanded from climate change alarmists resulted from the global economy being essentially shut down, and yet did not matter at all in the grand scheme of carbon dioxide concentrations. Said to be the control knob for climate change. CO2 emissions. If you reduce the emissions, you reduce CO2 in the atmosphere as a greenhouse gas. Even with that reduction, combined with a 17% upward shift towards wind and solar, the Earth's atmosphere didn't notice. Yeah, here we go, parts per million. Global atmospheric CO2 concentration continued upward, unabated in 2020. Now we're at 415 or so parts per million monthly carbon dioxide CO2 concentration. It's going to take more than a year, Josh. Where's your evidence, baby? Because we have a year. Emissions went down significantly from the good old US of A. How much would you want the USA to reduce emissions before you would finally say it ain't going to do anything? Because China and India are still heavy on coal. How much? These guys are clowns. The clown show, as seen in the graph above, CO2 in the atmosphere increased during 2020, even during the economy crippling. There isn't even a blip in the CO2 emissions decline. They've actually gone up. This lack of any reduction in atmospheric CO2 concentration clearly demonstrates that no matter how much the U.S. reduces CO2 emissions, no one living today will at any point in life see a measurable change in climate attributable to that reduction. This is especially true since other countries, such as China, who only give lip service to emissions demanded by the Paris climate. And we can see here's China. World fossil carbon dioxide emissions. Look at that. China just going gangbusters since the year 2000. And you can't blame them. They got people to feed, houses to warm, bodies to warm. You can't blame them. Here's India's in orange, and they're going up here too. Can't blame them. People to feed, bodies to warm. It's a fool's errand to think that U.S. can change the climate by reducing CO2 emissions, especially when other countries aren't even bothering to try. We can only mitigate any further changes in the climate, something mankind has been successfully doing for generations. Yeah. All right, so we'll see what y'all have. If you're a green Nazi, you need to go because you're not welcome here. You're fake. You're faker. You're anti-human, which means you want people not to live on this earth because you think people cause climate destruction. And you're nuts. It's simply that true. Because you have to say, well, people cause climate destruction by global warming. What caused the medieval warm period? What caused the little ice age? What caused all this stuff? Certainly wasn't an industrial revolution. It certainly wasn't because they had billions of people walking the earth. It wasn't. None of that. Now, do people have issues with the environment? Absolutely. Monoculture agriculture is bad. I've talked about that last night significantly, as a matter of fact. I don't like it. It does have lots of negativity there for sure. Bad farming. But where does a lot of that come from? Oh, the subsidies from the federal government. It's crazy. It's almost like Dwight Eisenhower is right. In his farewell speech, when he talked about the military-industrial complex, we also talked about the educational industrial complex, which no one seemed to talk about. But all right, be it as it may, there's lots of positive stuff out there, my friends. Lots of positive stuff. Just be happy, for heaven's sake. Recognize the other risks. Markets are high. What are you going to do? Well, here's what I do. I'm not pulling money out. I'm just riding along with it. I don't know if Eric's on here or not, but let's just go back we'll take our trusty phone here. All right, we'll go back to the end of 2018. We're going to look at S&P 500. And the end of 2018, Q right there. December 23rd, 2018, the S&P 500 was at 2416. All right, that's when we had a 19.8% decline in Q4 of 2018. So 2416. Today, the S&P 500 is at 4185. All right, so this is without dividends, by the way. This is not shares. This is just price to price. 2416, 4185, 2018, 2019, 2020. So we're going to say that's just for simplicity. We'll say was that 15 months? So 2416 is our present value. 4185 is our future value. We didn't make any payments into it. We're going to say 16 months. That's a 41.9% annualized rate of return. 41.9. Someone had said on my YouTube channel today, he said that if you retired in these years, you just solved your sequence of return risk. You don't have to worry about that anymore. Could not agree more. So even if the market falls 30% from here, all right, so now we're at 4185. We're still down. Actually, we're still down 2416 to 2929. So we started here 2461. We went up to 4185. Even if we fall by 30%, we're still at 2929, which would be future value. Still 12%. Oops, I'm sorry. Still compute. I still give you a 14% rate of return over those 18 months. 18 months? No, it wouldn't be 18 months, right? It'd be 20, because 2019, 2020. No, I'm sorry. So it'd be 20, 24, 28 months. 28 months. So let me do that. But still, you see how it was, right? So we're down. We went from 2461 to 4185. Even if we fell 30%, we'd still be at 2929, which is still 500 points over 2416. That's not even including dividends. That's still, 500 points divided by 20. That's still 20% above where we were just 29 months ago. That's what I'm saying, man. So it's like, what are you going to do? Now, if you're about ready to retire, yeah, you got to take a defensive position without question. And that's why I say Wellesley. I just like Wellesley. Not going to lie, I like Wellesley. But should you throw all in with Wellesley? I don't know, maybe. We just got to protect against getting smoked. But you've had such a huge run these last 2 years that even a 30% decline, hell, even if we 41.85 minus 40%, it still puts you at 25.11. Right back where you were, still ahead of where you were at the end of December 2018. You gave away those 2 years, but you're still back where you were just 2.5 years ago. Man. Now, for me, I'm riding it out. I'm riding it out. So I'm plugging. I'm hoping for the best. Recognizing that, so let's see, where was I at the end of March of last year? Now, I got a 42% decline. I gained all that back, but still plugging money in. So I'm ahead of where I was by far because I got all the money back just from returns, but I've also been plugging money in as well. So I'm well far ahead of where I was even before the coronavirus reaction hit. And then it's just nuts. So, I'm still plugging, man, and just keep plugging. And the market is going to fall, but what do you do? I don't know. You can't just go buy real estate. Real estate ain't cheap. I thought about it. If I had a chance, if I could pay off all my mortgage with my investments, I would. I don't have enough money to do that, so I'm not gonna. But man, I thought about it when I was taking a shower today after doing all my gardening. I said, man, I should sell some of my assets that are not my IRA and just pay down some of my mortgage. I said, I just can't do that because I'm still going to have a mortgage, and then I've reduced all my liquidity, and I yet still have a mortgage. I just can't. I can't do that. So, all right. So let's see what kind of thoughts, questions. So Lydia says her Tesla dropped 30%. Has Tesla really? Tesla down that much? Oh, it says 739. What are you talking about? Oh, I guess it was at 880. I remember Tesla was at 500 something. I remember Jason Proctor was doing a video when Tesla's like 550, not that just a couple weeks ago. He said he thinks it'll go back up. Yeah, Tesla's back at. It's a bubble. I'm telling you, that ain't gonna last. Oh, luck, TC luck. Oops. All right. I'm good even with a 40% drop. Dollar cost averaging with a bar, but what, dude? That is freaking you in the interwebs today, big man. My house value went up 14% in a year. I think the normal rate is yeah, exactly. Yep. 100%, Lydia. That's what I'm saying. So the housing has gone up, the stocks have gone up, the bonds have still gone up. The 10-year treasury is still at 1.55. It's not like the bonds are trading at dirt cheap and the yields are 6. They're not even anywhere near that. This is just the inflation. The stimulus and all this crap, all it had done was help people have money inflate asset prices. It didn't help those people who are living paycheck to paycheck. It just did not. This friggin' pisses me off. Cornbread said he's at 60-40. I wonder if I should alter that. Yeah, I don't know, man. That's why I love the old Wellington fund. Don't even think about it. Wellington or bust, baby. That's why I say. Tom says sometimes his wife calls him a bot. Does that count? Volcanoes, yeah. Volcanoes can really cool the environment. That's for sure. All right. Tom Majors, buy. He's our Maryland buy. Should I do a Roth conversion if I don't have heirs? If you're married, maybe. But if you're single, I wouldn't. I literally don't. No, I don't see any benefit. I mean, look, could we make a case that makes sense? Yeah, but I don't see much of a benefit. When Powell raises interest rates, the market will drop. Be ready, people. We'll see. I have not purchased any gold in the past month. No. Why? That's a good question. Why you ask? Is gold? I have no idea what the price of gold is. Does it get knocked around? Because if it is, I'll buy some. Absolutely. Houses paid. I tell you, man, just having your house paid for. So cornbread, 60-40 stocks, a bond, your house is paid for. Pfft, what are you going to do? 55-45, 70-30? It's not in the overall scheme of things, dude. It's not going to do. I mean, just keep where you're at, brother. Assume you're a man. Corn pop, keep where you're at. Just freaking. Why would you change anything? This is my thing too. Is I'm not picking on you. 50-50 or 60-40, Josh. If you just look, it's all pretty much the same. You're not. One was down, let's say 22%. The other was down 25%. Did anyone actually notice a difference? No, no one did. I'm not a big fan of crypto. I just Mike C says gold has been flat. Corn Papa's a bad dude. Right on, man. Mike Powell said, or Mike C says gold's been flat the past few months. I don't own any crypto. I don't have any. I find it. How. All right. How's Bitcoin going to overtake the dollar? You don't sell the dollar to buy Bitcoin. I mean, I guess you could, but everyone says, look at my Bitcoin. It's worth 40,000, 60,000. 60,000 what exactly? Dollars. Exactly. Yeah. Bitcoin is worth what? Is worth dollar bills. And as such, until Bitcoin is traded like a real currency as opposed to speculation, it will continue to be speculative and not a currency. It's just no more than that. No more than that. And it won't be a currency until it's somewhat stable. Now, the federal government is, the Federal Reserve Board is accustomed to a 2% inflation target. So we go in knowing the value of the dollar is going to lose 2% each and every year. That's a goal. Everybody knows that. So everyone knows what costs $1 today will cost $1.02 next year. And $1.04 something the following year. Everybody knows that. Bitcoin could be 70,000 tomorrow, 40,000 next day. That's not a currency. It's a pure speculation. If people want to do it, I got no qualm with that. It's just there's this idea that Bitcoin or what I don't even know what the other things are, Coinbase and Ethereum and all this. Well, that's the thing. Even if a crypto becomes a world currency, who's to say it'll be Bitcoin? 100% right. It's just no one knows, man. And so that's my 100%. So Lydia says stocks better than Bitcoin. Stocks have earnings behind them. Not all stocks, but most stocks do. They have earnings behind them. Tesla, not much, but still, you can make an argument that Tesla will have future earnings to justify its current high price. I wouldn't, but I guess people do. But I wouldn't touch Bitcoin with a 10-foot pole or any crypto. I mean, you could touch as a speculation. I got no problem with that. But the idea that, I mean, at least a stock, you have an earn. Literally, people are going to, I mean, as that Costco day was nuts. Everybody masked up. I had my mask down here. Somebody said, would you pull your mask up? Some lady there, sure, you got to pull your mask up. I said, but I did go to Lowe's and I did not have my mask on. And there are more and more people not having masks on, and hardly anyone outside had their mask on. So put that in your pipe there, Fauci and the CDC. Now, this is Georgia. When I was in Missouri, no one had their mask on at Walmart. I was like, yeah. Even the people working there is like down here. It's like, yeah, I think I think we're starting to get ahead of this now, and I'm very happy. I'm very happy. I hope that we refrain from this. Slowly but surely, cooler heads are prevailing. I'm starting to feel it in my bones. I listen to Brett Weinstein and Heather Hying, and they were pretty big scaredy cats of this whole thing initially. And they're, there's literally evolutionary scientists or biologists, whatever the hell, they're scientists. And I can just hear it in their voice. They're starting to say, what the hell, man? It's those are kind of my arbiters of where the mainstream is, because I've never been for any of this crap. But they were kind of, and now they're kind of not so much, and I'm digging that. Now they're even questioning the V's. I'm like, whoa, Heather Hying and Brett Weinstein questioning the V's? That's good. Yeah. And if you read, listen to Viva Frey, up in Canada, Quebec, it's freaking nuts up there. I mean, it's like, talk about Nazis, it's nuts. And Viva was a pretty moderate leaning guy, and he's just pissed. He's like, this is insanity. And I love it. It's made a lot of fence sitters not be fence sitters anymore. And we've lost a lot of people. I'm telling you, a lot of the right-wing people who used to follow me have fallen away because they weren't truly conservative. They were scaremongers. I have a sneaky suspicion. This is an accusation. I don't have any research on this. I have a sneaky suspicion a lot of those right-wing people who fell away were atheistic. I really believe that. That this life is so valuable to them that they will do anything to protect it. Anything to protect it. Even if it's along with, thinking that Fauci and the clowns of the CDC and know what the hell they're talking about. And I truly believe that. And as such, it's sad because there are many right wingers who are certainly not Bible thumpers. They don't. This isn't their book. Their book is the How to Make Money machine. That's their book. Sadly, and a lot of libertarians like that too. In fact, they find this is simpleton because they might have talked to some guy who's a clown and didn't know what he's talking about in terms of apologetics. And they said, that guy's an idiot. I'm so smart. I'm so smart. SMRT. I'm so smart. SMRT. And I just, right on, Tim. Yeah, I'm not sure. Dell says, with a trip to Missouri close to 2,000 miles. I went to Kidder, Missouri. I drove. I don't know how many miles it was total, Dell. What do I think of an NUSI ETF as a possible alternative to bonds? I have no idea what that is, brother. Yeah, well, Eastern Tennessee is a boofy. If they're wearing masks up there, I'd freaking say, what is happening? What has happened? Crypto's a hedge against out-of-control fiat dollar spending. Okay. I like Costco stock. Lowe's too. I don't own them, but I like them. Yeah, look. Costco is run by social justice warriors, but they give a great product. There's no other way around that. I'm a huge fan of Costco. Huge fan. They're SJWs. But they look. With that said, with Amazon too, can't stand them. But it's a great company, man. It's a great company. I do think when the Republicans take over power, and look, by the way, there's not going to be a Supreme Court stacking. Can we stop this, please? It's not happening. I'm just telling you right now, it's not happening. There's not going to be a Supreme Court stacking. The statehood of D.C. is a little bit more on my radar. I'm not all that worried about that. It's literally blatantly unconstitutional. Seems like the statehood for Puerto Rico has fallen by the wayside. I would have thought that'd be more likely, frankly, but it seems like that. I haven't heard anything about that. There's not going to be a Supreme Court stacking. I'm just telling you, it's not going to happen. They might try to get through a statehood for DC. That's not going to fly. At least I don't think. But that would be. So can we stop? I mean, what? There's not going to be a Green New Deal. There's not going to be a Supreme Court packing. They're not going to raise the minimum wage to $15 $15 an hour. There will be regulatory stuff. The Dear Colleague letter from the Department of Education is really what started to allow for many men to be accused and kicked out of colleges for false accusations. You know what I'm saying? I mean, it's evil, evil crap. that real women were raped. You know that, right? School people. And yet you were using Mattress Girl, Lena Dunham, and all this stuff to go after innocents, even though there were real victims of rape and sexual assault, you freaking scumbags. And as such, no one believes anybody anymore. What's that chick's name who accused Brett Kavanaugh? She's a clown show. Everybody knows that. She made that crap up. We all know that. So we can't believe anybody anymore. Sad, because there are real victims of harassment and sexual assault, never mind outright rape. But yet you don't know who to believe anymore. So you're just like, whatever. It's all a scam. It freaking pisses me off. It should piss you off too, man. I got $2 and a wife. You know what I'm saying? It's freaking nuts, man. And they can all kiss my butt. But that came from Dear Colleague from the Department of Education under Obama. There was no legislation passed. There was no discussion in the halls of Congress. It just happened, Dear Colleague. And the same thing, you hear about this kid, Kiran Bacharya at University of Virginia Medical School? Well, the Nazis are running these campuses, my friends. The Nazis are running the campuses. It's freaking scary crap. And I tell you, it sucks that the Republicans got to do it, but the only way to defeat these people is through the lawyers, which is why you got to fund institutes like the Institute for Justice, American Center for Law and Justice, the Alliance for Defending Freedom. You got to support these people because they're all that stands in the way for your freedom. No different than what they used to do for the NAACP, the SPLC. I mean, I know they're clowns, the SPLC. We all get that, but they did do some good work initially. That's just a fact. The ACLU. But it takes money to fund these people. If you want your freedom, you got to donate some money to support these causes. My man Turtle Boy over at Turtle Boy TB Daily News. We funded a GoFundMe page because he was being harassed by some clown. And well, the whole thing was nuts. And long story short, GoFundMe, he had $15,000 he raised, and GoFundMe returned all the money because they said he was engaging in harassment or something like this. No, he was the guy being harassed. So anyway, we got Aidan Kearney got a lawyer who defends Alex Jones, as a matter of fact, and he's been able to raise at least $10,000, that $15,000 as of 2 days ago back, which is good. I upped my donation to him by 50% because that freaking pisses me off. I'm like, wait a second. All these social justice warriors, they can do whatever they want, accuse anybody of anything, threaten people, and nothing happens to them. Then when real right-leaning people try to defend themselves by doing GoFundMe, they get kicked off the platform. And yet the social justice warriors can say whatever the hell they want to say. It's freaking nuts. And the only way to beat this is through the courts. Thankfully, the Trumpster is able to get a bunch of court people appointed. And that's good. That's our saving grace for the Trumpster because he dropped the ball in 2020, I'm just telling you. But where he and Mitch McConnell did great work was getting judges on there. I'm telling you, man, this is where the action is, but it takes people with money to freaking go after the clowns at the universities, at the government institutions, at the the police forces that are violating your rights for masks and stuff. You see what I'm saying? It's nuts. Anyway. All right, my friends, think I can get on out of here. Oh, dude, where you're at? Come on, Lydia. Wear your NRA hat. That shows you're cool. That shows you don't give a rat's ass. I tell you, it's like wearing hell, nowadays not wearing a mask is worse than wearing an NRA hat. Put that sucker on, man. Put that sucker on. Wear that with pride. Say NRA or bust, baby. Man. Yeah, Dr. Chris, that's right. Her Christine Blasey Ford. Tim says, I hope they don't screw. I don't think the step-up rules. I think there is going to be some tax stuff. I do. And I think there's going to be a hell of a lot more spending coming down the pike. I do. Because look, man, Republicans got no leg to stand on because they were just as drunken infantrymen as the Democrats are. Sadly, it's all big giveaway to the teachers' unions. We all know that, to bail out these profligate cities like Chicago and LA and stuff. Yeah, it is what it is. It is what it is. There's nothing to do about that. But in terms of suspending the government largesse, remember Acorn? Remember those clowns? I mean, we've had many. When Clinton was in office, they were giving money. Look, this goes back. This is a Democratic playbook, man. Why do you think they're able to get these rabble rousers on a drop of a hat to come protest? Because there's money at stake, man. There's money at stake, and the rabble rousers say, "Look, I'll give you $20 for your freaking shot of cocaine if there's crack if you come and protest it. And this, we all know. Ed Rollins called it walking around money during the 1993 New Jersey governorship. And if people say, that's racist, he goes, everybody does it. It's called walking around money. We got money. We give it to the precincts. The precinct captain knows what to do with it. He makes sure the vote gets out. This is how everybody knows this is how politics is played. Everybody knows that. And I'll never forget Ed Rollins, who was running, what's her name? Christine Todd Whitman, who turned out to be a big faker. Of course, just like Chris Christie, she said, hey, I need some walking around money to get the vote out. You can't believe you're saying that. It's racist. Everybody does that, too. It's nuts. The Democrats just do it better. But Republicans got to do that stuff, too. I mean, it's literally how you get the vote out, or at least you get rabble-rousers to protest. I mean, none of these people, Black Lives Matter, Antifa, very, very few real believers. Most are just paid protesters. That's all there is to it. And how you know that? Because a chick is buying these mansions. BLM, buy large mansions. That's BLM. And, of course, corporate America, they don't care. They just don't want the people protesting them, man. That's all there is to it. Yep, the guy at UVA got expelled for questioning microaggressions. And he was a med student, too, man. Nuts. Right. Yep. The NRA. What someone said, what do I donate to? I donate, first and foremost, I think it's good to find a family in your locality that you can help out, who's financially been hurt somehow. And I've shared with you some of the cases where you all have helped me donate to people around here. I think it's a big deal, and it makes you feel better. It's awesome. First and foremost, I think you share your abundance with your fellow neighbor, and sometimes you got to look hard, if that makes sense. And I think it's a big deal. I also think if you're fortunate, not that you've been blessed, but if you're fortunate enough to have positive cash flow, don't be scrimpy with your tips, and don't be hesitant to just drop $10 on a tip of somebody. You know what I'm saying? I'm telling you, the smile and that kind of stuff goes a long, long way. A smile and $10. That's probably that right there will probably do more than almost anything else in terms of just basic humanity. We donate to a lot of anti-abortion groups, not anti-abortion groups. They're groups that there's one we got one in San Antonio and one in New Jersey. Pregnancy centers, I think is what it's called, where they're trying to get these 3 or 4D things where you can see the baby in there. We do it in lots of various localities. There are in San Antonio, the Hill Country Pregnancy Center, and then the one in New Jersey, the Camden Pregnancy Center, because I despise abortion, every aspect of it. I hate it. It's evil. It should be stopped, but you're not going to stop through legislation. You're going to stop through seeing a young lady who's confused and scared and saying, hey, look, there is a path here. And then you won't, no one ever does this on our side. But they always say, you're going to yell at someone who had an abortion. No, we don't ever. No one ever yells at a woman who's had an abortion. We never do. Because you know why? Because we've all done evil things in our time. All. And abortion is evil. The person who committed the abortion is not evil. I've done evil. You've done evil. We have nothing but sympathy and empathy for someone who felt the need to do that. And we pray for them. And we just say, man, good Lord, please let this woman recognize that it doesn't have to be this way going forward. But no way do we follow her. None whatsoever. That'd be like saying, I don't want to get to my peccadillos, but that'd be like saying people yelling at me for the sins I've committed. Hell, you'd be yelling at me until the dinosaurs return back, all the sins I committed. And no righteous guys like that, because we know inherently we're not righteous. As such, who am I to judge you for the sins you do when I got my own sins? It seems like almost like Jesus talks about that. It's crazy. So we say, hey, there's an alternative, and they're going to have to make the choice. But we know, I'm not a woman, I've never had an abortion, but plenty of women had, and they tell about it, and it's horrible. And we want that story to get out, because it's helpful to have young ladies, or not just young ladies, but generally speaking, young ladies who are thinking about that, to know that this is a long term. It could really bite you in the butt. Think about this. and hopefully they'll think twice. And that's what a pregnancy center can do. It's like, look, here's this baby. You can see his fingernails. It's a baby. It's not a fetus. It's a baby. Abortion stops a beating heart. Oh, such a great. So anyway, I do donate to my man Turtle Boy because he's fighting a good fight up there at First Amendment. I've donated to Alliance for Defending Freedom. They're big on school choice, things of that nature. Institute for Justice. I'm missing one. And some I'm missing. There seems like another one we donate. We donate monthly to what's that one? I can't remember what they call it. It used to be the Christian Center for the Family and Aging, and now they call it. I can't remember what they call it anymore. They changed the name. We donate monthly to them. See, there's another one we donate. I can't remember, but anyway, whatever the feeling comes, because it's fun to donate. It's awesome. But you know what's the funnest thing? Not just knowing that your money is going to good use with the Turtle Boy or the IJ, but when you see just giving to somebody who's hurting and just that's it. Nothing feels better. You are blessed to be able to donate. It's like a blessing that you want to share, because you're just like, you're not alone. We've all been there. We've all been beaten down. You're not alone. And just because look, we live in a nice suburban house, where life's good. Doesn't always be. Well, it hasn't always been. And just, a little bit of attitude of gratitude goes a long way. It really does. Yeah, I don't know how we're gonna. I don't know how we're gonna rectify this. The amount of aborted children. I don't. I find it. It just breaks my heart. Like, here's Lydia. You're only 16. You don't want to have a child. My mom. Oops. Never mind. I won't say more. Let's just put it this way. I don't understand the hostility that the left has to children. Again, I showed you this last night, or just a few minutes ago, but I'm going to share it with you again. Oops. Man, I sit there in just awe of the beauty of babies. I'm like, how? Hold on a second, let me find it. There's my daughter Chloe right there. We thought we lost her when she was first born, and there she is. And here's, oh man, 18 or 17 years later, it's still just, man. And here's Lydia. She said she had her daughter when she was 18 years old, and she's loving every minute of it. Literally, not literally every minute of it, but man, and for people not to recognize that, yeah, right on. It's right. Your daughter's a blessing. I think I've done well because she's 100%. I mean, to not see the value. Oh my goodness. And I get it's tough. It's tough. My wife has 8 brothers and sisters. Her dad died when she was young. Her mom was like a cashier at friggin' Kmart, raising a family with no money. Dad didn't leave hardly any life insurance. You know what I'm saying? He died with pulmonary fibrosis. It was pretty sudden, but yeah, right. Lydia says, not every moment she's sassy. Right on. Yeah. All right. We'll see you guys. Thanks for being here. Mucho gracias. Thanks now.